Good morning, everyone. Hello, this is Rashmi Shah here from Simplicity. I'm calling you I'm doing this webinar from Dallas. Uh, and thank you for joining on this Saturday morning. Now, as usual, I'll just say my disclaimer before I start the event. This event is for Indians residing in India, and it's not for the people who are living in North America. And I'm going to talk about the investment scenarios in India and what are the trends emerging after the first global lockdown, correct? And this is a part 2 of the series. And today I'll be covering automobiles, home automation, and digital payments. And what do you look into this? I'm going to go a little bit deep, but at a high level. So let's start, and you can ask me questions at the end. Text me, and I'll answer them. And let's begin. Now, if you see the current scenario, there were two things, correct? We went through a lockdown phase, and now we are going through reopening phase, but we have not reopened completely all over the world. Still, the number of cases are increasing every day. So the lockdown phase, we had health crisis and we had economic crisis. Now, the health crisis status today is, they are saying by the end of July or August, we'll have more than 2 crore infections worldwide. The number of deaths of today, which is very unfortunate and sad thing, is more than 525 or 30,000 as of yesterday. And they're expected to cross 1 million before this crisis ends, which is a very big number. Million means 10 lakhs people, which is very big number. And this is going to create an economic crisis. Unemployment has gone to almost 30% in most of the countries, including US, India. And this has created a lot of geopolitical crisis, as you have India and China, and US, and there were riots in US, and there are a lot of social unrest also, which will create that. So this is the bad side of it. And as the economy reopens, there's another side to it, which has, after this pain, which has brought something good benefit of it. The people have working from home, and most of the corporates and companies, businesses across the globe has got used to working from home, which was not the case before this COVID-19 happened. Never in the history of the mankind that so many people work from home, and it's a new norm today. Then a lot of innovation has started. We call it disruptive innovations. Like everything has become online and digital. So many streaming, people working from home. Like the meeting today we are having, this kind of meeting was hardly anybody was doing before 6 months. And this is a new thing, the positive side of the sad event. And the financial stimulus of almost $20 trillion of cash has been pumped in the market, and equity has emerged as one of the best asset class. It's slowly emerging, and positive side of this thing is happening, and that's why the markets are recovering. Now, it has surprised many senior hedge long-term investors. They got caught in this market by selling short in the month of April, May, and they didn't know what to do, and they went on sidelines. Many senior retired fund managers have retired because of this kind of situation. I see more and more money coming to the equity market, because as the interest rates are falling down worldwide, equity is become one of the best asset class today, because you can't sell real estate. Of course, the gold is a good asset class, but there is a limitation how much you can invest in gold. So this is a scenario as of today. And as economy opens up, you will see higher equity flows higher savings coming to the equity market. America, which has a very low saving rate, saw the savings rate go up to 32% in the month of in the month of April, which is one of the highest unheard of in US. Because what happened, everybody was staying at home, so you can't spend much except for your basic food, and your income was same. Most of the people got their salaries, full salaries, and laid off they got unemployment benefits which were higher than the normal salaries. So the saving rate went to 32% up. Then it was 25% saving rate in the month of May. So this created a lot of pent up demand as the economy opens up. So people are going to come for more shopping, and they did come for shopping in the month of June, and that's why the cases went up again suddenly, correct? So that's the bad side of it. So you will see this kind of back and forth going on for the next 2 quarters. Now, this is the scenario as of today. Now, if you look at the portfolio building, when you build your portfolios and your financial wealth portfolio, there are three kinds of companies. You have a growth stock, you have value stocks, and you have disruptive innovation stocks. Now, if you see the growth stocks, they go in value based on the revenue of 4x times. Value stocks are 2x times, and disruptive innovation gets valuation of 10x times of the revenue. Like you see companies like Google, Apple, Uber, Amazon, they get the 10x valuation. Now in your portfolio, you need to have all three kind of companies, and certain businesses will at times can be classified as all the three categories are there. And this is and if those, like Microsoft today is also a growth stock, it's also a value stock, and it is also a part of a disruptive innovation. So this kind of stocks, they become the core of lot of big mutual funds, core mutual funds, and they become a core part of your portfolio also. So you will find this kind of stocks in India too. I'll talk about that later in this later part of the presentation. And in your portfolio, you need to have 40% growth stock, 40% value stocks, and 20% disruptive innovation companies, because the world is changing. And what I mean by disruptive innovations, I'll show you new innovation. You got companies like Amazon, Google, they came, and in the year 2020 you will see this, energy storage, artificial intelligence, robotics, healthcare, and blockchain, correct? So this innovation which is going to come is going to increase the economic activity X number of times, multiple times, which mankind has never seen. Because of this kind of innovation and this kind of progress in the science, what happens, the cost of manufacturing products comes down, and it brings a deflationary pressures also in lower interest rates. So in the year 1900, 1800, interest rates were low. In this period, the same way the interest rates are going to be low. Now, this is going to create a lot of problems for a lot of retired people who are currently investing in bank deposits and in the bond market. They are used to 8 to 9% of returns, and when they see the returns going down, they turn towards equity market. We'll see that happening in the coming 2-3 years, starting this year, and there is going to be a massive change. And this growth also in the companies and the businesses, as the products become cheaper and cheaper, you will see a different class of businesses emerging in the economy. So that's why we call disruptive innovation. Now today we are going to focus on three sectors. One of is automobiles, that's a value sector. Home automation, that's a growth sector, and digital payment is a disruptive section, innovation. So I've taken one sector, one industry from each different kind of sectors, correct? So let's start with automobiles. Now, if you see, what is the future of mobility after this corona virus came, correct? Now, humans, they can't stay at one place. The human race has progressed because of its mobility, ability to move from one place to another. Now, and this is going to continue, correct? We can't be locked down for a lifetime. We have to move on. And that's what everybody is waiting for. So which kind of companies in the automobile sector will do well. So let's think about it in a big picture. Now, if you look at this way, the current mobility options, you have air travel, you have passenger vehicles, you have railways, public transport, ships, and private transport, correct? Now, like Uber and taxis and all that, automobiles. Now, if you take all this air travel today, people will travel only when it's absolutely necessary. So international travel will take a longer time to come back. It will take 2 or 3 years, but it is going to exist. Without that, globalization and the world economy can't function. And domestic travel will be the first to pick up than international travel. Then if you take the passenger car vehicles, so now today if you want to go from Pune to Bangalore, in the earlier days, old days, you would prefer flying. Now you'll say, no, I don't want to fly or go by train. I don't control. I'll prefer to go by control my own destiny. So the passenger vehicles will see the more higher demand as the economy opens up. Railways, public transport, and all of the thing will be the second choice. So they are going to take much longer time. So the other thing about automobile sector is it directly or indirectly controls 50% of the world GDP. It impacts 50% of the world GDP because all tourism, education, all of the sectors are dependent on them. Without mobility, you can't go to foreign universities. You can't go to your universities in India within to studies, correct? So even tourism, shipping of products, everything depends on automobiles, and that's a very big sector. Now, if you look at the top 25 automakers of the world by market cap, this data is as of close of Friday, means yesterday. Today the market is closed because of 4th of July in US, the Independence Day. Now, if you take the market cap of all these companies, it's less than $1 trillion. It's less than $1 trillion. And Microsoft, Apple, they have a market cap of $1.5 trillion. Each of those companies. Now, even Amazon, correct, has a $1 trillion market cap. Now, all these automobile companies put together is about $1 trillion. Now, a big number one is Tesla. Now, the first Indian company you see here is Maruti, which is at number 12. And if you take Tata Motors, it's at 4.5 billion. It doesn't come in the top 25. Bajaj Auto two-wheeler is in $11 billion. Hero Motors is $7 billion. Now, Mahindra is there, 8.8. Now, why Bajaj Auto and Hero Motors is not in this list? Because they are two-wheelers. This was automakers by four-wheelers. Now, as a company, Tata Motors is the 5th largest automobile manufacturer in the world. It's the 5th largest group, but the market cap, because it has a lot of debts and it incurred losses, the market cap is much lower at $4.5 billion compared to Maruti Suzuki, which is a profit-making company and cash-rich company. Now, if you see Tesla has a market cap of $204 billion, which is more than Toyota, which is 10 times bigger than Tesla, because but still Tesla commands a premium because it's an innovative and disruptor. Many people say that Tesla is not a car company, it's an IT company. The cars are driven by computers, software, and they are going to come with more innovations in the coming 2 years, and that's why it commands higher premium. Now, same trend you will see going forward. There is a massive innovation going to happen in the automobile sector in the coming 5 years. You will see major changes in this sector. Now, coming back to India, if you see that India has a long way to go. India is the 5th largest automobile manufacturer in the world. China is number 1. China is 10 times bigger than India, not 10 times, 9 times, and US is 5 times bigger than India. So in India, the four-wheeler segment is much smaller compared to the two-wheeler segment, correct? two-wheeler is very big because India, the infrastructure to drive that many cars is not there. Even if the affordability is the second question, it's the question of how much the roads can handle. So the growth of the four-wheeler segment in India will depend also on the growth of the infrastructure sector. As infrastructure develops more and more, we will see more and more cars in India and road. That's also the other thing which we'll see. Now, the two-wheeler currently plays a dominant role. Now, why I've selected automobile sector, that as the economy opens up, you will see a massive pent-up demand for two-wheelers first and then four-wheelers, because people will prefer to travel in their own vehicles rather than taking a public transport, which was a choice in before Corona happened, correct? Before this event happened. And the same trend we are seeing in America. In America, that there is a demand for cars, and the stocks levels are very low because last 3 months most of the plants were shut down and most of the discounts have gone. So you will see us for two-wheelers and first and then cars, that we'll see that. And so you may see a rally in these stocks in the coming few days. Will the innovation in India also, there is going to be an innovation, but the innovation is going to be at a slow pace. It will start first with two-wheelers, where you will see more electric two-wheelers coming. Then you will see electric car. Whereas in America, the electric car has come first, then electric scooter. So innovation is going to be different in different countries in the automobile sector, correct? And China is also leading in innovation. Electric cars are very popular. After US, the second largest country which has the large population of electric cars is China. So US and China are leading this, and most of the other countries, they still run on fossil fuel, oil and gas, correct? We still have that. And then in India, if you see this companies, the largest companies in India in two-wheeler, Hero Motors, Honda is not listed, Bajaj Auto, TVS Suzuki, and Royal Enfield, correct? Eicher Motors. Now you will see a rally in these stocks in the coming few days. Now, these stocks are not a portfolio stocks. This sector is now, you can invest in this sector for medium term, not for long term. So, in your portfolio, you need to have long-term growth stocks. These are not long-term growth stocks. These are medium-term opportunities. These are, we don't know the future of this, any of these companies, because it's a very capital intensive industry and technology is changing very fast. So you will see a massive, I'm not recommending that you hold these stocks for next 20 years or 10 years. But currently the valuation perspective, you will see a rally here. That's what I'm trying to say. And you need to, when you do this, you have to look at your entire portfolio. It should not be more than 5 to 7% of your portfolio when you buy those stocks. Now, the two-wheeler and four-wheeler segments, as I said, you will see, as far as India is concerned, you will see more innovation in scooters, two-wheelers than four-wheelers. So is the four-wheeler market bad in India? No, that's not the case. It is a good market, but it will take a longer time because the poor infrastructure of parking and the narrow roads we have in India. So I would prefer always to drive on two-wheeler in the city, correct? Now, which are the best companies in India to invest today? Tata Motors, Mahindra and Hero and Bajaj. These are the 4 good companies. They are all large caps. And along with this, you will see some auto ancillary companies also doing very well, especially companies like Asai Safety, companies like, MRF Tires. You will see some very good rally in those stocks in the coming 6 months. Now, the next topic, the next sector I'm going to talk about is home automation. Now, as far as home automation is concerned, you will see changes, because now I'll give you a classic example. When this coronavirus came up, people were even scared to go in the elevators, correct? Because everyone touches the elevators and you can get infection there. So they came up with an idea in New York that you can have an app. On your app, you can press the floor where you want to go and the elevator take you there. Now, of course, the access to that elevator app was given only to people who are working in that building. Now, those kind of innovations you are seeing, and you'll see in India also, correct? There are a lot of automation will come because of artificial intelligence in homes, like in security. Electrical fittings, so your phone will drive the automation, and you can control the air conditioning in your home. And this kind of stuff we already see in America in a big way. The same thing will happen in India, and this is the future. And as more and more people are going to spend more and more time at home instead of going to office, like TCS has said, for next 1 year, you have to work from home. Now, as more people work from home, they'll invest and upgrade their homes and automate it, correct? You'll see that kind of stuff happening. Now, which are the companies in this sector? There's a huge potential in India for smart homes, like in seeing the Western world. And companies like Siemens, Havels, Honeywell Automation is the number one company in India too, correct? So you'll see that kind of stuff happening. So this is a good sector to look for. Now, the third and the final section I'm going to talk about today is digital payments. Now, digital payments, we all experienced what happened in the last 3-4 months. What monetization could not do, digital payments, coronavirus did to digital payments. What Modi could not accomplish with demonetization, Corona helped him in further giving a push to the digital economy. Now, if you see, the number one country where digital payments are most popular and have picked up like anything is China. China's economy in 2010 had a $10 trillion, and the digital payment was $1 trillion. Today, the digital payments are $34 trillion, and the economy is of $14 trillion. Why it is like that? Because $1 rotates 5 times a year. That's called velocity of the currency. Now, out of the 5 times, 2.5 times the payments are going through digital payment, and that's what mobile phones have done that. Now, if you see in India also, you see Google Pay, Paytm, even today you can buy vegetables, you can buy anything through mobile phones, correct? And this is going to go up drastically for next 5 years. So after China, India is going to lead in digital payments economy. In America also, it's very popular. Nobody is taking cash in US. Today, if you shop everywhere you have to make payment digitally, because currency may carry a virus, hard currency. Nobody wants to touch anything. So you carry your bank in the phone in your pocket, correct? And that is the power of technology and mobility which we are going to see. And this is going to spur a different kind of industry, and people can do business. You don't have to have physical locations, and you can sell any products, and you can accept payments on your mobile phones. And that is the beauty of this new technology which has come. And there is a huge, massive uptrend you are seeing in the stock prices of these companies, the companies which are leading in. Now, unfortunately, most of these companies are not listed in India. They are listed in US. So for that, you have to go through the mutual fund route by investing abroad, and which is a good way. You diversify your portfolio by having some dollar investments also. Now, one needs to have this kind of allocation in the portfolio. Now, even in India, if you're looking at the stocks, their new companies emerging in this category is State Bank of India credit card, then HDFC Bank and Reliance Industries. They're like with Geo, correct? Geo payments and all this. These are the only stocks available in India. The rest of the stocks you have to go through the US equity route. Now, this is going to also spur up the Indian economy and is going to make a faster, the it's going to help government of India also in collecting more taxes and bring more transparency in the economy. Yeah. So with this, I'll end my today's presentation. 2020 is not the year for selling your equity. It's the year where you need to be aggressive, because this is a year where everything has been shaken up. All the bad news which coronavirus got us in February and March, and it impacted drastically. Yes, it's true. A lot of people unfortunately died. A lot of people lost their jobs. A lot of business has been disrupted. So everything is getting reset. So everything is getting reset. Every company, every government, every economy in the world is resetting its strategies, and that's why the valuations are very low today. And from at this point of time, the risk, every bad news is factored in the market prices. You need to analyze and build a portfolio. This is a very good year, like 2008, 2001, when once in 10 years, correct? So this kind of correction has come after 10 years in India and the global equity market. And a lot of people has taken advantage of it. So I'll give you another example of this. How many people got caught in the wrong cycle here is when coronavirus happened in the month of December. China knew it. What are the implications? Because they already locked down the economy in the first week of Jan. The world was slow in reacting it. So at that time, China created a state fund and pumped in. Knew that they saw an opportunity that the stock market globally will crash. So they will get a very good opportunity to buy stocks in strategic companies across the globe. And same thing the government of Singapore did, Saudi Arabia did. In the month of March, huge inflows came in India, US, and many companies, 5 to 7% stakes were bought by Chinese fund. And that's what government of India realized in the month of April, and then that's why they banned investments in India by neighboring countries. They didn't mention countries. But most of the retail investors panicked. Most of the hedge funds also in US panicked, and they went short. And they got caught on the wrong footed, and they're strong. Also, many promoters got an opportunity to increase their stake in their companies. So this 2020 is a year where realignment of investments happening worldwide. Every company, every economy, every government is reworking the strategies. So this is the way you look at this. Now I'm open for the next topic of my webinar after 2 weeks is the consolidation phase of Indian businesses. So which businesses are going to get consolidated and how they are getting in the consolidation phase. I'm going to talk about that. With this, I end my webinar today, and I'm opening this session for questions, and feel free to ask questions, and I'll answer in the order which they come. Okay, the first question I'm being asked is, since 2 4-wheeler sales are likely to rise, how will financing companies which give auto-related loans perform? Oh, very good question. Yes, auto financing companies will also do well, especially companies like Bajaj Finance, Bajaj Finserv, and all those kind of companies. Yeah, they'll also rally. Now, even they have been corrected. They have substantially corrected. We will not see those 52-week lows for those companies from the current levels. You will see already there is a nice rally taking place, and they might correct 1 or 2%, 3%, not more than that, and then they'll go up again. Yes, there is a good upside for them. Yeah. Then the next question is talking about disruptive technology. What will happen when Google, Apple, and Samsung enter automotive industry? Uh, so Google, Apple, and Samsung, they are entering in the driverless cars, and they are more focused in US today. And for them, yeah, but yeah, they will impact. Of course, they will impact, and um, that's why I'm saying automobile sector. You don't buy any stocks for 5 years or 10 years. You buy for next 2 years or 3 years, and for Google, Apple, and Samsung to come to India, it'll take another 7 to 8 or 10 years. That impact will be there. Long term, yes. In short term, no. Now, with COVID 19, the next question is with COVID 19 cases rising every day, shall we expect a big correction in the coming months? Oh, good question again. No. Now, every bad news. So, in US, you are saying every day. I'm just now doing this webinar from Dallas. The number of cases are going up every day here, and it's going to currently in US every day they find 50,000 new cases, and they say it might pick up to 1 lakh per day. A big number. Apple has closed most of its stores. Microsoft has declared to close all the stores, but the stock price is going up. You won't see the correction of that magnitude. You will see corrections in certain companies, certain sectors, based on their realignment of the what do you call how they strategize their balance sheets. So you will be, and there will be some mergers and acquisitions and bankruptcies, and there will be a stock specific corrections, but there won't be a broad based corrections. There will be a normal corrections of 300 500 points swings, but every downside, every time when you see a correction, it would be a good opportunity to invest. You won't see a correction, a free fall like March. You won't see that. But the reason I'm saying you won't see that is in US alone, in last 1 month, $5 trillion of cash balance has increased in the money market accounts of the banks. The normal cash balance, whatever the US banks had, that cash balance has increased by $5 trillion in just last 2 months. Imagine that much cash is lying on the sideline only in US. Imagine the rest of the world. Everywhere people have a lot of cash. Now most of us, we were staying at home. See our own personal finances. What happened? Expenses came down. Of course, the income also came down, but it didn't come down in that proportion compared to the expenses. All non-discretionary expenses got cut, correct? Only your food expenses and the basic necessities you are spending on. Everything else, all non-discretionary expenses were there. Discretionary expenses got cut. So that's and so your savings, everyone's savings went up. And that's the pattern we have seen worldwide. Now, the next question I have is, with rise everywhere in the world, without telecommunication sector, lockdown wouldn't have been possible. We are spending more and more time on internet, on our phones. Yes, and that sector has turned around in India. Yeah, it's a good sector to be investing in. Will there be mergers in automotive sector? Yes, there will be mergers in automotive sector. As you know, Tata Motors officially said they are looking for partners to cut the expenses. Tata Motors is one of the company which owns 2 of the top 10 brands in the world. It has 2 brands, Land Rover and Jaguar. Still, it's making losses. It's a very good brand, and to make it profitable, they are trying to tie up with European companies. So you will see mergers and acquisitions. Will Bosch and Siemens lead home automations in India? Yeah. I won't say who will lead the home automation, but they will be in the forefront. Yeah. Bosch, Siemens, Honeywell Automation. They all will, in US, Honeywell Automation is number one in home automation. Mm. Which other sectors benefiting from the shift from air travel to road travel? Will hotel and restaurants benefit? Hotel and restaurants will take a longer time to recover, uh, because what has happened is international tourism is not going to start soon. Uh, Corporate travel is not going to start soon. So I'll give you the biggest hit which has been taken by in this coronavirus is companies are reluctant to send their people to business travels because they don't want to get sued if something happens to the employee. No company wants to take a risk. So I'll give you a classic case of even Microsoft, correct? Microsoft had Microsoft stores across US. They decided to shut it down and everything is online. And in one day, one fine, they took a hit of $400 million loss, but they didn't want to take that risk. So that kind of trend you will see. It will take a longer time for businesses to tell their people to travel. So as business travels is more profitable than tourism travel, correct? The numbers may be larger in domestic tourism or international tourism, but business travel is very profitable. So business travel is going to take a longer time. So international travel is going to take a long time. It will first start with domestic travel, and the domestic traveler doesn't spend that much money compared to the international tourism. So you'll see even the students, interstate students, inter-country students going abroad, that's going to take some time. So restaurants and hotel will take a longer time to benefit from that. How will the low manufacturing and automotive sector affect the market and financing? Okay, this is again a very good question. I have noticed in last 2 or 3 weeks in US, the inventory levels at every store, every departmental store, every business has gone down by drastically. You see stores half empty. I'm talking about even the number of choices and products which are available has gone down because the supply chains have got disrupted in the last 4 months. So, and there is a pent up demand. Suddenly the demand has increased. So everywhere the manufacturing activity will pick up in full swing in next 2. The other thing which I like to share is in the month of March and April, the US had estimated that by end of this fourth quarter of 2020, the US economy will be having a negative 20% GDP compared to the fourth quarter of 2019. Then they revised that negative minus 20 to minus 8% in the month of June. Now, recently, last 2-3 days back, they revised that minus 8% growth, negative 8% for the fourth quarter of the current year to just minus 1%. So there's an upward revision in the GDP of the economy. So they say it's going to be a V-shaped recovery as of today. So I don't manufacturing sector will pick up. Capital goods also will pick up, like auto. And the low inventories of automotive sector will lead to less discounts. And I don't think financing would be that much of a problem. The financing market will not see a growth, but it will see a lot of churning because a lot of old vehicles will be again sold. And so I'm talking about US market. In India, it will be stagnant, yes. My next question is, should we increase our investments in the US stocks? US stocks should be one of the core part of your portfolio. Everyone should have 15 to 20% minimum in US stocks because they are going to drive. But should you increase from 20% to 25, 30 at this juncture? No. You should keep it at 15 to 20, not more than that. The reason I'm saying is you will also see a lot of FDI coming to India, and last 3 to 4 months, the US outperformed the entire world economy, the stock market I'm talking about. In next 2 3 months, you may see the emerging markets outperforming the US. So this kind of stuff will keep on going on, emerging market versus US. Uh, so if you take 2008, 9, and 10 experience, I see that in 2008 the dollar was 55, and as the US lowered the interest rate, and they declared that it's going to remain low for 2 to 3 years. The dollar from 55 came down to 40 rupees. I'm not saying the dollar from 76 is going to come down to 60 rupees, but it will come down to 72, 73, or 70 also. So but that doesn't mean that you sell all your US investments and focus 100% on India. You need to continue having a balance and a strategy. US should be a core part of it, but I'm not recommending to increase it beyond 20% of your net wealth or net portfolio. At what CAGR Indian automotive industry likely to grow? It's very difficult because, as you notice, most of the companies and the economies and the worldwide, everyone is saying that they are cancelling their forecast, correct, for the current year. They are not able to forecast what's going to happen. So it will be difficult to forecast at what CAGR the automotive sector is going to grow. But there will be a pent-up demand, and the valuation and the hammering which this sector has taken, that might go up, correct? The stock prices might go up. Yeah. With that, I end my today's webinar, and thank you for attending it, and I appreciate it for your time. Thank you.